Okay, it's the 2nd of October 2024. We've got about 25 minutes prior to New York Open. We're going to get into our analysis shortly and draw our zones and then look for a possible trade setup during the first 2 to 2.5 hours of the New York session. Okay, let's get straight to our charts. All right. Uh, Before we proceed, I'm going to pull up this slide just to share the purpose of these streams, right? If you haven't watched any of the previous streams, then this is the purpose of these streams, right? To do the right action, or for me to teach the right action that will lead to the right result. If you do the right action, which has 4 steps, and this is what I practice and I try to teach uh, during these 2 to 3 hour streams. These 4 steps or these 4 actions will lead to one of these 2 results. And both of these results, either a win or a loss, is the right result, right? So I teach how to draw supply demand zones correctly. I teach how to identify high liquidity zones to trade from, right, or HLZ. I teach how to draw support and resistance levels correctly. And I teach how to manage risk when your trade goes in drawdown. Okay. So if you do these 4 things correctly, you will either have a win or a loss. If you have a win, your win will very likely be a low risk, high reward, high probability trade. And if you have a loss, it's very likely that you will lose less than what you had planned to lose initially. Okay. Um, all right. Let's get to our chart. So this is the daily time frame. Even though I don't use the daily time frame in my analysis at all in my in session trading, because I feel it makes no sense. It's completely pointless exercise trying to analyze the weekly and the daily if you're just trading 2 to 3 hours um, in a session open, right? So either the Asian session open or the London session open or the New York session open or the NYSE session open, if you're just trading the first 2 to 3 hours of that session open, the weekly daily time frame, analyzing that and you know trying to figure out what's going to happen on the weekly or guessing what's going to happen on the daily or having a daily bias makes absolutely no sense, right? It's just a waste of time. But the reason I have this is because some traders do trade for longer hours during the day, and for them, so if you are trading 2 sessions, if you're trading the London and if you probably sit in you know uh, 6 hours, 7 hours, 8 hours in the day, if you're trading that long, then yes, a daily bias is important because you need to know what the daily candle can do, because you're trying to make use of the of majority of the day's move. But for me, who's trading just 2.5 hours of the New York Open, I don't need to catch majority of the daily move. I just need to catch the volume push of that of the session open time. So if it's the New York Open, I just need to figure out where the next M30 or H1 candle can go, right? And that's the grab that I want to catch, right? Or the next H4 candle can go basically. Okay. So on the daily, just to explain what's happening on daily, we are kind of bouncing between 2630 and 2672. We've got 2650 right in the middle of that, and price has been reacting to 2650, right? So a couple of days ago, price closed below 2650. Then yesterday we closed above 2650, but we are respecting 2672 and 2630. And today, so we don't know what's going to happen today. I really don't care what's going to happen on the daily, because I'm going to be looking for H4 supply demand zones and high liquidity zones to trade from. Let's get to our trading chart. Before we draw our zones for today, these are the zones that we had marked yesterday. So if you do watch yesterday's stream, or if you even watch the last 30 minutes of yesterday's stream on the 1st of October, you will see that we had these marks We had these lines, these green lines, exactly the way where they are. We had marked them. This light red box was exactly the way it is that we had marked them. Just watch the last 20 minutes of yesterday's stream and you'll see that this red box is exactly where it is. And inside that, I had marked two supply zones. I think on the 5 minute time frame, two supply zones, right? And I had marked this one as well. So there were three zones there. And this is the trade that I took. So price came and touched this, but I couldn't take a pending order there. So I grabbed the one just below it. My stop loss was just there. It was about 22 pip stop loss, and price dropped about 150 pips. So I got out basically at this support. Soon as on the lower time frames, and price started rejecting this support. So if you go to the M5 time frame, you will see that price on the actually M1. You will see price rejected um, this support here, right? When price started to pull back in and close, when this 1 minute candle started to push back in, right? Start push back and started breaking these highs, I closed my trade, right? So right there, that 2657 was a daily SR level that we had marked yesterday. That's been there on our chart. I had marked that as well. So around there, so that was about 150 pips. I got out on this trade, right? And that gave me some fairly decent RR. Okay, but then price did come further back up and touch the top of that the top green line that we had marked, the supply zone, 267 to 90, and then it just touched it. But this is not my trading hours because I ended my trading hours around here. That was about 2.5 hours, and then later on in the New York session, price came up there about an hour and a half or 2 hours after I finished the stream. It came back there, touched it to the pip 267 to 90, right exactly inside our light red box. Right now, this dark red box is a high liquidity zone, as you can see here. I have marked it as a high liquidity zone. Okay, I had marked it yesterday as high liquidity. Inside that dark red box is a light red box, which I had marked showing a particular candle. Okay, this candle, this M15 candle, this push down, right? That candle was marked, okay? And that candle, I went down to the fire, let me go down to 30, was it 30 minute? Yeah. So on the 30 minute, I had taken the top wick and the body of that candle basically, sorry, here. I've taken the wick here. I'm just sorry, let me go down to the 15 minutes. It's better. Okay. On the 15 minute, I've taken the top part of this because price had already come here. So I drew that box from here to the top. There was a 35 pip range. That was the area I was expecting price to reverse from. But it reversed here first. We tapped here first and then it reversed about 165 pips, and then we came higher and tapped the final supply zone inside that. It came deeper into that light red box, and that was the final supply zone at 267 to 90. We tapped it and we dropped about 275 pips, right? So I just want to what I'm trying to reiterate here is that these high liquid there is the importance of drawing these high liquidity zones, importance of identifying the high liquidity zones. That's what I'm trying to explain. These high liquidity zones are important, right? Price does kind of, once it gets there, you may not get a reversal, but you very likely will have a reaction. And if you have a reaction, it's very likely that you can take a low risk, high reward, high probability trade. That's the purpose of this. Okay. Let's clean up our charts and let's start this process all over again today. So these are the SR levels that we had drawn yesterday, and you can see how price reacted very well to them. This is the last one. It's kind of hasn't almost come there. Yeah, it's almost come there as well. Okay. Okay, 630. Six, seven, two. Fine. Okay. Perfect. Hmm. Okay. Just to save a bit of time, I'm going to keep these zones at the extremes. I'm going to explain them in terms of um, why they are supply demand and also why if they are high liquidity zones or not. I'm going to explain all of that, but I'm going to save time by redrawing them because price hasn't come there yet, right? We had drawn them yesterday. So if you really want to see how they were drawn, you can watch yesterday's stream, but I'm going to explain exactly how we arrived at these zones, how I marked them as supply demand zones, but I'm going to save a little time but by not having to redraw them over and over again. Okay, so yeah, let's get rid of all of that just to save an additional 5 to 10 minutes. Okay, right here. So let's start with supply because just keep in mind that price, these zones are drawn yesterday and price never came to them, right? We haven't come down here and we haven't come up here. So because we haven't, I'm going to leave those ones at the extremes and I'm going to draw whatever zones that we have in between this and this. But I will explain these, why I've drawn them as supply demand zones, okay? Here we have a drop, base, and a drop. So we have a drop there, then we have two base in candles, and we have a drop here, right? So this is the leg in, two base in candles, and a leg out, okay? So we're going to mark that there. Okay. It's possible even to consider this as a base in candle because that's a rally, three base in candles and a drop, right? Instead of drawing another zone there, that's possible too. Okay. So that's a rally, three base in candles because this candle has more wick than body, right? So it's got wick, it's got a 48 pip wick there, it's got a 186 pip wick, about 85 pip wick there, right? A total, so the total the wicks, the two wicks are greater than the body. The body is just 58 pips, right? So this candle has more wick than body. So I'm going to use that as a base in candle as well. So three base in candles and then the drop, okay? So that's the first supply zone. Um, Above that, we have some sort of supply here. It's very ugly on the H4, but there is a rally here. So this was the rally. There is some base in candles here and then a drop. So I am going to mark that area. And out of that, so you have a rally, you have two basin candles here. Okay, so this is the leg in, two basin candles and a leg out, right? But price has come into it. Price has come into it here as well. So I'm going to take the zone up because that's all that is left of that zone, right? And we're going to go down to the H1 and look for a basin candle if you have a better kind of a rally base drop there. Okay, we're going to go down to H1 later. Okay, in terms of demand, this is the only demand that we have closest to current price. This is a rally, that's a base in candle, and that's a rally, right? So one base in candle in the middle, rally, base, rally, okay? I'm going to extend that to the right. Okay. Um, yeah, we have H4 support form here. Um, Drop and a rally. We're going to look down on the H1 and see what it looks like. All right. So before we get there, let's look at the ones further down. Here we had a drop, two basin candles, and a rally, right? Drop, base, two basin candles, and this candle is the push-up rally, right? But price has come. So if I extend this box up here, price has already come into it. So I'm going to draw what's left of that zone. Okay. So what's left of that zone is just this bit, right? That's still demand, but that's all that's left because price has come into it. Okay. And then same goes here. We have a rally. We have six basin candles here. 1, 2, 3, 4, 5, 6. Six basin candles. So you would draw it like this. This would be the top of the rectangle, and that would be the bottom of the rectangle. But price has come deep into it, and this is all that is left of that demand zone, right? I'm gonna extend it to the right. Okay. Great. That's about it. That's price. That's about 180. That's fine. Okay. So here also we had a drop and then a rally here. There is a H1 base in here, right? I'd shown this yesterday. If I go down to the H1 quickly, I'll show it to you again. That is the base. You have a drop, base, rally, base, rally. So there are two H1 demand zones there. I have used both of them to draw it on the H4. Okay. So we're going to extend that right as well. And then this one, obviously, right? Now, this many zones are not needed. These are just from yesterday. So, but I'm just going to keep them on the chart because we had them since yesterday, right? Okay. I will probably tomorrow I'll take out all of these and redraw them afresh again. But I just want to save a little bit of time today. Okay. Now, let's put the digits on this. That's the high is 311 and the close is 065. 311, 065. Okay, right. And then here, okay, so here there is a rally, a basin candle, and a drop, right? And price has come to it. Okay, so I'm going to use that one. So that high is 77.93. Yeah, that's fine. And so price has come into that rally base drop, right? You can consider this as a drop. So price has come into it. So 311, 3. Okay. Okay, so that's all that's left of that supply zone. It's still supply, right? Because we have a rally, a base, and a drop. These three candles are the drop. That's the rally, that's the basin candle, but price has come into it, right? So that's all that came into it yesterday. So that's all that is left of that zone, right? And then we have the zone high up a lot higher, which is this rally, this basin candle, and this drop. And price too has come a little bit into it. So that's all that is left of the zone, okay? Right, we're going to talk about these light red boxes and the light green boxes later. I'm going to get rid of these for now. Okay. Here, so this is close 311, low 454, 312. Okay, that's correct. This one is also correct. So here, just going to look at the H1 time frame. Yes, there is a drop, a base, and a rally, right? So that can be extended up there. There's a very small zone on the it's there is something on the H4 because we have a drop and a push up, but it's on the H1. Okay, it's on the H1. You can see the base. We didn't take anything out on the right, so it's not a high liquidity zone, but we're going to leave it like that. So low 457, 457. I'm going to quickly look at the M30, see if prices. Yeah, we can bring it down here. It's better. Okay, because prices now come deeper. That's better. So this open is 49.21. You don't need to go to the M30, but sometimes when prices come deep in and you don't see it very clearly on the H1 or the H4, you might need to refine it on a lower time frame. Sorry. All right. Now, that's the closest H4 supply zone, and that is the closest H4 demand, but this is better demand, so I'm going to keep that label there, right? This is demand, but I may not be looking to like take a trade from here because there is no real push up from here. This is a better zone to take a push up from. Okay. Also, we're going to identify which ones are high liquid zones and which ones are not. Let's start with up here. Did this supply zone take out an opposite demand zone? Right. On the H4, it hasn't. This drop here didn't take out anything here. Okay. But I'm going to look on the H1 and see if it did take out something. So on the H1, this drop, there was demand here that it took out, right? So this was a demand zone. Okay, we have a rally, we have 3 basin candles here, and then a huge push up, right? So it did take out that. So I'm going to identify it as a high liquidity zone, right? I'm going to identify that as a high liquidity zone. Um, let's look at the one above. Did that take out anything on the left? Yes, that took out this, right? So there was a zone here, right? There was demand here. There is, yeah, all of that is kind of basically a base, right? That's all a base. Even down here, all of that, all of that. So this push down took all of that, right? This push down. So that is also high liquidity zone, but it's already been tapped. But there is about a 45, 50 pip of that zone still left. So that is a high liquidity zone. And yeah, because it took out this demand, right? So this moved down, took out all of that H4 demand. So rally, if you just take out all this as a basin candle, that's rally, and all of that is a base, and then the push up. Okay. Right. So did this take out anything here? So we're going to go down to the H1 because we have just a wick on the H4. And yes, so this move took out that demand and that demand. So rally, 3 basin candles and the push up. Then you have a rally, a basin candle, and a push up, right? So it took out all of that. So that too is a high liquidity zone. Okay, so we have 3 high liquidity zones above. Okay, let's quickly look down here. Did this take out anything on the left? No, it didn't. So that is the closest supply that you have, a drop, base drop. This high didn't take out that high, so this is not a high liquidity zone. Did this demand zone take out anything? Yes, it did. So this demand took out this supply. There was rally, base here, and a drop. This demand zone took out all of this highs, and this demand was taken out by this move out, right? So this demand took out this supply. So that is a high liquidity zone, right? Did the one below take out anything to the left? This one, we have to go down to the H1 to see because we can't see anything on the H4. Um, so this move, yes, it kind of took out this. Yeah. So this is the move. Actually, no. This supply. This supply was taken out by this move up. So this is not a high liquidity zone, but it is the origin of this move up, right? So I'm not going to mark it as a high liquidity zone, but I'm going to pay attention to it if price does get there, okay? Because it is the start of the move that caused this push up about almost a 480 about a 480 pip push up started here. So that's the origin of the move. So I am going to pay close attention when price gets there. Further down, I'm not going to consider this little bit as a high liquidity zone because price has already tapped into it. Here, this is a high liquidity zone because this took out thing H4 supply here. So this one took out that supply. So you have, just zoom in. Yeah, you have a rally, two basin candles, and this drop, and this move took out that. So making this one, this area 2617 or 2618, a high liquidity zone, right? Further down there. That's enough. That's enough for today. Okay, that's what we have for the New York session today. So I'm going to quickly post this on the group. Um, okay. So NY has just opened. We have news in about 15 minutes. Um, it's not very important news. All right. Um, what's on the daily? Okay, so we have a new daily support level here. The open of this candle is 263364. 263364. Around 263350. Okay. I always round it out at the closest round number, 263350. And here so there is one there. Yeah, that's about it. Okay. So on the daily, price is bouncing between. Yeah. Okay, on the H4, prices. Okay. Previous daily closed above 2650, and the daily candles are ranging between 2672 and 2630. We are currently testing H4, H1 demand. It's a very uh, it's a very small demand level here. There is demand though, so if it looks like demand, then it is demand, as I say, right? If it looks like demand, there is demand there, so we have to draw it. We can't ignore it. We have to draw it. So price is right now testing it. There are daily SR above current price. We have daily SR here. We have here 2657 and we have a 2672 where price tapped yesterday perfectly, 2672, right? So we have 2657, 2672, and below current price we have 263350. Okay, these daily SR levels. Um, for buys, yeah, so that's basically right. So you want to buy, so if you're using the indicator and trying to buy, then these are the areas, right here, this box here, somewhere here, this one, and even this one. This one, two, three. These are the three areas you should be looking to take buy trades. If you're looking to sell, you should be looking to sell up from here or from here or from here, right? If you're looking to trade the signals of the indicator. Also, as a second, if you look at the trade plan that I have shared with you guys, for whoever has the indicator also has a trade plan with them. If you read that, then there are other setups there are two other setups that you can also trade as per the indicators. So, but these are the main supply demand signals that you can trade from using the indicator. Okay, right. So let's look at these levels a little closely now. Um, okay, so I'm not going to look for any buys inside here because this is not a high liquidity zone. So I'm going to look at this high liquidity zone for a possible setup. Um, on the H1, I really don't care too much on the H1 for looking for liquidity. There is a big M30 candle there. Going to pay attention to that. And there is one here, right? These two candles. I am going to mark them out, and then we're going to take a closer look at them and see which ones are better, okay? Because they're both in a high liquidity area, in a high liquidity zone. So that is one, and then there is one down here, okay? That candle down there. Now we're going to go down to the M15 and uh, right, so that candle is um, a push up, right? That candle there. It's going to mark that 4270 and 960. 4270. Okay, so that area there. So that's about a 30 pip range, which is fine. And then here in this is these two candles, these two M15 candles. Okay, we're going to mark that as well. 3864, 3454, 3864, 3454. Okay, that's also about a that's about a 40 pip range. Okay, so that's about 29 pips. Is about 40 pip. We're going to just pay attention to those areas where price gets there. Okay, um, right. Further down, this is um, weekly, kind of a weekly support level, 2630, right? And there's an M30 candle right there. So, okay, gonna look at that on the M15 and see what it looks like. So this candle, that's a bullish engulfing candle. I'm going to take that candle there. So the high is 3028 and 2653. 3028, 2653. Okay, and that's about a 37 pip. Fine. That's anything under 30, 40, 35 pips. Anything under 35 pips is good. Okay, that's a that's an area that I'm going to look at. So these light green areas, I'm going to pay extra attention at these light green areas that are inside these dark green areas, right? I hope that's clear. That's what we do every day, right? So these areas, this light green area, this light green area, this light green, I'm going to pay extra attention to these when price gets in there, right? Now we are about 80 pips away from the first one, 84 pips away from the first one, 128 pips here, and that's about 200. That's fine, okay? Now, do I have anything further down? This one I don't care too much about. Further down is 300 pips. Okay, let's look at that as well, maybe. It's maybe on the 15-minute. Yeah, this candle right here, right? This candle right here. So I'm just basically looking for candles that stand out, right? So that candle stands out right here, and then the push happened, and then so the candle that stands out and the push happens after that, right? So this candle stands out. Those are two the move out, but this candle does stand out. Okay, so gonna mark that there because also it's sort of an engulfing candle. If you look at the M30, yeah, yeah, it is fine. Look at the H1, it's part of that big push up there. If you go down to the M5, it's basically this candle here, right? That's the candle that I'm kind of looking at. I want price to come back in there. That's about 17 pips. So maybe we look at it on the 15-minute. All right, here. So high 194948, 639. It's we got news now. Right now we got news. This is the news candle. Okay, so the price broke. Well, yeah. Anyway, there's nothing much happening right now. This is not an important news event. It's that's a news event. Um, so it came up with good numbers, but not really important. I really don't care about these kind of news events. Um, okay, so let's see. Price. I don't know let price do what it needs to do for the next 15 minutes. Okay. Uh, broke on two lows. We broke on this low as well. So let this 15-minute candle close. We got another, yeah, we've got 15 minutes. We're going to wait for this candle to close before we decide to do anything. So, right, we've got these light green boxes marked all the way down here, right? And the first one is about 60 pips away, and then 100 pips away, and then 185 pips away, and then almost 300 pips away. So that's fine. Let's do the same for supply as well. Um, so inside this high liquidity zone, I'm looking for um, liquidity, right? So if I go here, that's liquidity, right? That stands out from all of that. That's the M30 candle that stands out, right? So as soon as you see something like that, I just mark it because I want when price gets there, I want it to be drawn to it, right? I just want to be drawn to it. Let's look at that on the M15. So on the M15, yeah, it's a big zone. It's a big zone. Price rallied up, dropped, and then continued to drop. 30, it's clear. Yeah, I'm going to mark this candle like this. I can't make it any smaller unless I go down to the 5-minute time frame. Yeah, there. That's better. 55. That's much better. That candle on the 5-minute is very clear, right? It's within this M30, so it's that M30 candle. Inside that, we found a 5-minute candle. Because it's not very clear on the M15 because we just have a wick there. But on the 5-minute, we have a full body bear candle, right? So this grab liquidity from 2672 or that supply zone that we had marked yesterday and then pushed, and this was where the big volume push came in and then just continued down, and price absolutely could not. It tried several times to get back in to go up. It tried here, came down, tried here, came down, tried here, came down, tried again, and it couldn't, and it just fell down after that. Okay, so 896 3336 6336. Perfect. Okay. So just keep in mind that these dark red boxes are all high liquidity zones. I'm finding candles within these high liquidity zones. Okay, that's what I'm doing. I'm doing here. So that's about 165, 75 pips away. Let's look further here in this one. If we that candle, okay, that candle there started that move down, but price has tapped it, and inside that candle is this M15 candle. Yeah, that's fine. Okay. 739 423. Low 423. Okay. That should be enough for the NY session. For the first 2 to 3 hours of the NY session, that should be sufficient lines and areas that we look at. So basically, that's 150, 160 pips away. That's 260 pips away. That's fine. All right. So now, very simple. All I'm going to do is wait at these dark red boxes, price to get to them. And when it gets to them, I'm going to pay extra attention to the light red box inside them. So there's a dark red box there, which is a high liquidity zone, and a light red box inside it. There's a dark red box there and a light red box inside, and that too is a high liquidity zone, right? Same thing goes for demand. There's a dark green box here, and when price gets to these light green boxes inside that, I'm going to pay extra attention. Same goes for the one here. There's a dark green box and a light green box there, and there's one down here. We may not get that far down, but we have ones here, right? And now we wait. Simple, right? Once we do this, so this whole analysis process takes about 30 minutes. So ideally 30 minutes before your session starts, if you want to trade like this, you need to come and do your prep work, right? That prep work is very important. You should not be, you cannot do this prep work on your phone. That is why on my mobile, I do not have any trading apps. So I have no C Trader, no MT5, no MT4, no trading apps, right? Because when I trade, this is my work. I want to be at my desk. I want to be able to see the charts clearly. Um, and I want to be able to draw my zones without any clutter. I want to have a lot of free mind space when I'm drawing my zones, and then wait for price to get to these zones to take trades. So I'm not going to be chasing price now, right? If he anywhere in between these, I'm not looking to chase price. I'm waiting for price to get to these zones, right? Once it gets to the zone, then I'll decide what I'm going to do, how I'm going to risk, how much I'm going to risk. You've seen me, how I draw the fib and how I take trades from these areas. So I'm going to wait for price to get there. So the news, as expected, the news didn't do anything. We just pushed up a few pips down, 30, about 30, 35 pips down, and that's about it, right? So price has broken two lows and created a wick. We could push up, but this is not a zone that I'm looking to trade from, okay? Because this is not a high liquid. That doesn't mean that this zone may not work. It could work. In my trade plan, um, I'm not looking to take a trade here. In my trade plan, I'm not looking to take a trade here, right? Now, it may work because this is a psychological number. You got to remember, 2650 is a psychological number. It's an area of liquidity. So if you look on the daily time frame, you can see the amount of times price has bounced there. So if you go down to the H4, it's even clearer, right? The number of times price has reacted to 2650 many times. So you can get a trade of 2650, right? It's right in between that resistance and that support. It's right in between 2672 and 2630, right in the middle, right? So you can get a reaction there. But I'm not looking to take a trade there. That's not a trade that is in my trade plan. Okay, I wait at the extreme. So I'm going to wait at these extremes to look for an opportunity. Price is very close to this, so I'm going to look at this candle here, this M15 candle that we marked. I'm going to look at it and see if there is um, 40.66. So basically what I'm doing is I'm looking for supply demand zones inside this. So in the light red boxes, I'm looking for supply zones, and in the light green boxes, I'm looking for demand zones on the lower time frames. On the M1, there's nothing too clear on the M5. On the M5, there is nothing clear, right? But there is that, but that is outside the. Yeah, yeah. So that rally, basin candles, and that push up. Okay, that push up 20 pips, and we just went up about 23 pips before we tried to come down. We just continue to go up. Okay, so from here, 36 pips. So maybe I don't like it much, but I'm going to watch it. I don't like these M1 zones at all. Down here, this is a lot better. That's a lot better. Right? Drop all of that is base and then the rally. So the open 36.41, 36.41. Okay, that's a lot better, and that is about a 18, 19 pip. If I take a trade there, it's 18, 19 pip stop loss. That's perfect. The 15-minute, there is one a little bit higher here. Close 36.86. Yeah, 36.86. That's better. Okay. $35.91. All right. So that's about a 22 pip zone. That's fine. This one I'm not too psyched about. Um, I don't like this much. We are about 45 pips away. Yeah, price did come through it. So we are breaking the zone. Once you break this, I'm going to just delete this green area. We are coming down. So now we're going to just pay attention. So if I do take a trade here, my stop loss is about, let's say at the low of that candle, about 20 pips. That's my zone, about a 20 pip zone. Um, yeah. Okay. Okay. So we did break that. So just waiting for price to come and tap this. Then I'm going to delete this green box here. As expected, that wasn't a high liquidity zone. I was expecting that hadn't taken out any supply to the left, so I didn't really care too much about that, and was kind of anticipating price to go right through it, and it did, right? So what I want to see is two previous M15 lows to be taken out when we get to this area before we look for a move up, right? So we've taken out this low, but price needs to come to this green area, right? We haven't touched it yet. We are very close to this, very close to this, the 43.12, right? That's exactly where we have it, 43.12 there. Okay. And this current daily candle has no top wick. Just keep in mind this current daily candle has no top wick. So this daily candle could create a top wick for itself, or the next candle can take out the high there. If this candle closes like this without a top wick, then the next candle can take liquidity from there. But there is 8.5 hours for the candle to close, so it's a very long time. Anything can happen in the next 8 hours. I don't care what's going to happen in the next hours. I'm going to be here for what, 2 hours more. It's 8:30 in New York, so I'll be here till about 10:30 New York time. So to me, what's important is what's going to happen in the next 2 hours, not what's going to happen in the next 8 hours. Um, all right, so just to again show you guys, this is the free trading tool that I use to calculate risk. Very simple. It's the position size calculator by my FX book. You can, if you're trading gold, you can just use this as Euro USD because it's the same values. Just put your account size and then how much you're willing to lose. So in terms of dollars, let's say I'm willing to lose, let's say about 20 pips on that, about $20, sorry, $20 on the trade. I'm willing to take a maximum of 23 pips stop loss, then that you'll get your lot size, right? That how you can. So then if you swap this with risk, so basically I'm risking about 0.8%, which is about zero, and then I can take a maximum of zero, about 9 micro lots, right? So I like to always keep that as a dollar value because on each trade I say, okay, I'm willing to risk about $20, depending on my account balance, $18, $20, $25 on this trade, and that is the risk for it. Okay. We didn't um, we didn't tap this area yet, right? So we don't know when this area is going to be tapped. It might be tapped in the next 30 minutes or in the next 3 hours. That we don't know. So price might just reverse and go up here and then later on in the day tap this area or tomorrow tap this area. But all we got to remember is this area is important for the reasons that we said it is important. We marked it out and we just wait. So price doesn't need to do it now. It can do it hours later, several hours later. But it can also come down in the next 15 minutes as well, right? So once you mark your zones, just if you mark them correctly, the way I kind of show here, I show you how I mark them and why I mark them. It's not guesswork. There's a certain process that I follow, almost like a mathematical uh, process that I follow to marking these zones, right? So if you mark them like that, then you just have to wait patiently for price to get to them. Don't try to front run. Price came close, missed it by 6 pips, 7 pips. Don't try to front run and take a trade here, right? Then the purpose of drawing these zones are useless. You need to trust your judgment. If you've drawn them based on certain rules, and those are the same rules that you follow every day when you draw them, then you got to trust your zones that you've drawn, and then wait for price to get to them. Sometimes they may not get to them during your trading hours. Sometimes they might get to them later on in the day, outside your trading hours, right? That you have no control of. That's all to do with volume and when the market moves. All you can control is the hours you trade and the risk you take on the trade, right? So once you draw them, you wait. Now price did come close. We did come fell short of about 6 pips and then pushed up about 80 pips, and it's still pushing up, right? We might push all the way up here. That doesn't mean that doesn't mean I drew the zone incorrectly. I drew it the way I draw every zone, right? That's a rally, that's a basin candle, and that's a rally. Very clear. Okay? But we didn't touch it. That's okay. We wait. Price might come up here. and then decide to go down, or might go down right here. Also, you got to remember now, here we've taken this candle took out this low, this candle took out that low. So that's the push up, right? That's the push up from the sniper entry. And we pushed 65 pips. So that's a stop loss of about 17, 18 pips, 18 pips. Pushing up, we could come all the way up to here, up to that fib level, 265820, 2658 roughly, 2658. That's possible, right? But that doesn't mean, even though I see a trade, I see an opportunity here, that doesn't mean I'm going to take that trade, because to me that is not a high liquidity zone. I'm not going to take a trade from there. But if you remember, I said previously 2650 is a very important area. So we did close below, and we have taken out two previous lows. So this candle, this M15 candle took out this low, and this M15 candle took out this low. And then if you draw the fib, price touched this. So this candle opened at 1530. If you go down to the 1 minute time frame, 1530 is here, right? This is the open of the candle. We touched it, we closed above, and we just continued higher, 70 pips up, right? But even though I see those opportunities, I'm not going to chase them. I'm going to take them because I'm going to wait at the extremes. I'm going to wait here or down below. Okay, got about 7 minutes for this candle to close. Um, there is nothing much happening today in terms of news. Okay, today is Wednesday, Thursday, Friday. Um, Thursday we got unemployment claims that should move price a bit, and then on Friday we have the big one, NFP. Okay, so price is probably setting up for tomorrow and day after. So let's just quickly take a look at what price has done so far, starting from the opening of the day. Throughout the Asian session, we do this every day just to have a better understanding of what price has done, a more macro understanding of what price has done. Okay. Um, okay. So on the M15, let's look at it. It's easier to look at it on the M15 because you can see the highs and the lows of the session very clearly. Um, so that is where the market opened today, right there, a small gap, and it opened. Okay, came above there, couldn't go any higher. So that's the yeah. So this is the Asian session low. Yeah, and this is the Asian high, right? So that's the Asian low, that's the Asian high. Um, yeah, Asian low, Asian high. Try to come back. Then we have the London low here. the London low there, and we have the London high here. Okay, so this is what has happened, right? The market opened here, came down, created an Asian low, tried to come back up and tap this area. It did come to supply zone there, dropped down. That was the Asian high, dropped down, broke below and closed below the Asian low, continued down. That's the London low. Came back up to test the Asian low. So at the Asian low, once it broke below, it created a supply zone, a drop, base in candles and a drop. That was the London high. Came back, tested it, did not close above it or break it. It did not break above that supply zone. Tested that supply zone perfectly. Came back down and now broke the London low. Right now, a candle needs to close below the London low for price to continue down. If this candle start to close above this, for example, 15-minute candle or 30-minute candle starts to close above this, that means we are respecting the London low and we're continuing higher. And where do we continue higher to? We continue higher to the London high, right? That's where price is heading, London high. And then if we close above that, 15-minute candles close above that London high, then we're continuing higher to the Asian high. That's our supply zone. And that's the area that we want price to come to. Clear? That is what has happened. Okay? The market open, Asian low, Asian high, closed below, continued down, London low, came back, tested Asian low, the supply zone, came back down, tested the low, now trying to push up. If we close above, we're coming here. If we close above this line, we're going here, Asian. Clear? That's what's happened. Okay. We came to these EMAs, kind of testing these EMAs. But we got a couple of minutes, just about a minute and a half for this candle to close. So if we do close, as I said, above these London high, then we can continue. Then we're continuing higher. Anyway, there's nothing to do here. I'm not looking to do anything here. So we gotta probably wait for the next 15 minutes. So I'll be back in about 5-6 minutes maybe. Um, yeah. So this candle is going to most probably close the next minute and a half. I don't believe it's going to drop 70-80 pips. It's going to close above 2650. So once it closes above 2650, the next candle should maybe grab liquidity and then continue higher, right? So we're going to wait for the next candle to close, the next 15-minute candle to close. That's the plan. We're going to wait for the next 15-minute candle to close and see where that candle closes. Okay, I'll be back in about 5 to 7 minutes. Okay, so stick candle has closed basically um, above this the London low, and we could push up. That's a range to fill, so price could continue higher. Um, 7 minutes for the 30-minute candle to close. So we could. So what's price likely to do is right now go above these highs, right? Prices should break these highs. That's about 55 pips. Price should break, push up. If the 30-minute candle closes above 2650 or around at 2650, then the next candle should grab liquidity and break these highs and continue higher and break these highs and then break even these highs and come to our area of interest, right? That is what I'm kind of expecting to happen. But we got to wait for candles to close before any of that happens, right? Okay, a 15-minute candle needs to close above 2650. Once a 15-minute candle closes above 2650, then we're coming higher. We're coming to these highs here. That's about 40, 50 pips away, and then we're coming from there to these highs, right? To about those highs there, which is about 100 pips away. So a 50-minute candle needs to close above 2650. You just gotta wait. You gotta wait. Yesterday, the move kind of happened at the beginning of the 4-hour candle, right? So we've got another hour for the 4-hour candle. That's about another 4 15-minute candles, a little over 4 15-minute candles to close. Uh, so let's see what price does. Maybe it's going to push up right here, right? We're going to have candles close, higher highs and higher lows, and we're going to continue up here. Once we come here, then maybe we'll look at to see what kind of opportunity we can get. Um, let's take a look at this area that we marked. Why we marked it? Okay, the reason we marked it was based on this 30-minute candle here, right? This 30-minute candle uh, was the reason for. Once this candle closed, then price just continued to drop, right? Once the candle closed, we dropped about 180 pips, right? Yeah, about 180 pips since then. So that's the area that I want to see price come back to. So let's just take a closer look at that area. Okay, so on the 15-minute, we've got a clear drop, base drop right here, right? So once the close of the candle is 5:30. Okay, let's take a look at on the 5-minute time frame. On the 5-minute, we have, yeah, that same drop. All of that is a base, and then we got one higher as well around there. So 11. Okay. Hmm. Okay, so that's if price gets there, that's about 150 pips away. It's a long way for price to get there today. If we get there, let's see if we can get an opportunity or not. Down here, we've marked these. These are about 100 pips away and about 135, 140 pips away again. And then further here, that's a zone that we had marked that wick. Mm. Okay, yeah, we're going to leave those as they are. So we had another 15-minute candle close, a doji, again below 2650. For price to continue up, a 15-minute candle has to close above 2650. A 15-minute candle has to close above this for us to go higher to this high here, right? Um, yeah, at least to that high. There's no wick at the top there, right? So that's about 29, 30 pips away. A 15-minute candle needs to close above for us to get to this high, then probably that high, right? Um, yeah, once we get there, we should come and take out this high as well here. It's the Asia, it's in the Asian session, yeah. Should come up here, 100 pips away. Take out this high. But a 15-minute candle needs to close above this. Until this happens, there is nothing. Now this candle is what you can call an inside bar candle, right? This M15 candle. It's in between the high and the low, or between the range of this candle. The candle opened and closed between the range of this candle, within this 79 pip range. So that candle is what some retail traders call an inside bar candle. Means nothing. I really don't care what it means. But that's what they call an inside bar candle. So basically it closed within this range, within the high and the low of this candle, right? So a 15-minute candle needs to close above for us to continue higher. Or if we start closing a bearish candle, a 15-minute bearish candle below 2650, then we're coming back down again. We're coming back down. We're coming down to this area again, this demand zone again. And that's where we're going to start getting interested. If we have a bear candle close below this, 2650, M15 bear candle, then we're going to pay attention because price is coming down, should come down here, right? Should come down here. That is about 67, 80, 70 pips away. There's nothing much happening. Nothing much has happened since the NY open. Absolutely nothing. We've got NYSE open in about 30 minutes, 25 minutes from now. So all NY has done is basically just ranged. We've just dropped down, gone back up, come back down, gone back up. It's nothing. It's not done anything right now, the NY session, because it's also, as we had marked, this area is not a high liquidity zone as per my criteria. this is not a high liquidity zone. So price has really done nothing in that area. It's just come down, gone up, come down, gone up, just ranged. Okay. Um, so price needs to get up here or get down here. We might not have, we might not get a move today because it's Wednesday, and also it's not because it's Wednesday, it's because it's just a couple of days before NFP. So generally Wednesday and Thursday set up for the NFP move, right? Um, we will know the setup only when we analyze the charts on Friday. So Friday before 30 minutes before the New York Open, when we analyze the charts, there is no guarantee that I might be able to see what these moves were for, what they were for. Um, might be able to see a clear setup, how price structured itself on Wednesday and Thursday for a Friday move. 10 minutes more for this M15 candle to close. We are just waiting. This high is going to get taken out. The 5-minute time frame, yeah. So 5-minute candles, strong bullish 5-minute candles are closing above 2650. So this high is going to get taken. That's the first high that's going to get taken out, right? These highs here, right here. These are going to get taken out. That's about 28, 30 pips away. These are going to get taken out. Once they get taken out, we're coming to these highs, right? Then this high is going to get taken out, should get taken out for price to come deeper. I want it to come deeper. I'm not willing to take a trade from here, anywhere here. I'm not willing to take a trade anywhere here, right? That's not going to have such a big stop loss. So price needs to come deeper inside here, be able to take a trade. And that's the kind of move candle that I anticipate has selling volume in, right? So if you look at the 30-minute time frame, again, that's the candle from that created this zone that I believe has some selling volume. So I might not get a reversal here, but it might get a reaction here. So then we just got to see if that reaction is has uh, a decent risk to reward potential. So where we can have a tighter, like I don't mean tight, like a fairly small stop loss to a larger reward. So we got to wait for price to come up here. 7 minutes, 7.5 minutes for this M15 candle to close, and we are coming right to this high here, as I mentioned. So once the 5-minute candles start closing above here, we got this one close above, then this one close above, then we can anticipate price come up here. Okay, that's the move. 50 pip move up to take out these highs. This high right here, take that high out. 60 pip move, take out that high. Okay, so this candle is trying to close above here again. Once we do, we should continue here. This market's very slow today, as expected. It's Wednesday, NFP week. We had some more volume on Monday, Tuesday. On Tuesday mainly, nothing much on Monday. Um, yeah, on Monday, the New York session, we didn't have anything much. It's just kind of trash. Nothing much happened here. But Tuesday, yeah, the volume came in at the end of the day. It went up. Yesterday, we had some volume in the New York session, about 240 pips up, and then about 280 pips down. It started in the New York session, went down. But on Monday, there was nothing. Um, the Asian session on Monday, Asian and London session on Monday had more volume than the NY session. NY session had some decent volume yesterday, and today we're just basically ranging with nothing. We're just in this block. This block is about 100 pip block, just ranging inside this. Candles are, so if you look at the last on the 1 hour time frame, you'll see um, right there in the range, right to that range, 100 pip range. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 candles, right? That's almost 10 hours. Price has been stuck the last 10 hours in this 100 pip range. Um, then here, yeah, there's nothing much happening. I might be here for another hour, maybe less, maybe less, maybe another 45 minutes, and then call it a day because I don't see any volume today. Um, Price is just ranging here and here. So if I were to draw support resistance here, Mm. So that's basically the resistance, right? So we've closed above, finally, after four candles, we've closed above 2650. So now we should come up here, we should close above this resistance and then come up to this resistance here, which is our zone, our supply zone. So once we close above here, we're coming to this, right? There is a resistance level there, but that's not that important because we've got a supply zone right here. Yeah, there is a zone right there. The zone right there. So once we close above here, we're coming here. But I'm not going to keep that because we've got a supply zone right there, so it doesn't make sense to have a resistance level right there because we've already got H4 supply, right? But if I drag this to the left, you'll see how price did react to that, and maybe tighter. Yeah, there. Yeah, it's perfect. Yeah, price did reacted. Okay, so we're coming up. Finally, took about four candles. Took almost an hour for the 15-minute candle to close, for a 15-minute candle to close above 2650, but it has. And now we've got to push up. We're going to come. We have to close above this. We're going to take out this high first, like I said, and then we have once we take out this high, we should come up to this resistance, which is this H4 supply zone. And once it comes there, it should take out this structure out. It should take out the high on this structure, should take out these highs, and continue higher. Um, yeah. Okay. Just going to wait patiently for price to come to our high liquidity zone. So that is resistance, and then this is support right here. Yeah. So price was ranging, if the last 10 hours was ranging between this 100 pip range, almost 100 pip range, right? About 100 pip range. Now we are finally, so Asian session, London session, they all kind of ranged between this 100 pip range. Now finally price is respecting this London low and closed above. and continue. So we said at the beginning of the session when I did the Asian London highs and lows, I said if we respect this London low and close above it, which it did 15 minutes, then price should come to the London high, which is that. So that was the London high right there. If you look at the beginning of the session, the first, I think the first 45 minutes, you'll see I marked the Asian high, Asian low, London high, London low. I usually do that every day, in case I forget, but I usually do it. So that was the London high, and I said if price respects the London low, and a 15-minute candle or a 5-minute, a 15-minute candle closes above it, then we should come to the London high, and that's exactly what we did. That's the London high, right? Now price needs to close above this resistance. A 5-minute candle needs to close above this resistance. 5 or 15 doesn't matter because this is high volume time. So a 5-minute candle needs to close above this resistance for us to continue higher. So we've closed, this 5-minute candle has closed right at this resistance. So if you close, I would like to see one maybe pull back down and then go higher, and then we should continue up to this supply zone right here, which is, there is also a resistance level right there. So it should continue to that supply zone. So this 5-minute has closed above, but no bottom wick. So the next one should probably pull back, create a bottom wick, and then go higher, or maybe the 5-minute candle after that. But this has no bottom wick, so it will pull down for liquidity. All right, so this is, if you continue to do this, if you continue to watch, price action at a particular time every day. For example, if you're trading the New York session, or if you're trading the London session for that matter, or the NYSE session, if you just watch candles for 2 to 2.5 hours every day at those specific times, you will start to read candles. You'll start to read candles. You'll start getting better. You'll start getting better and better at reading candles. Yeah, so that was a liquidity grab, that 1-minute candle. You can see we grab liquidity from the resistance level and we are pushing up. So this is why it's so important to draw them correctly. If you draw them correctly, you'll see this happen right at the zone. If you don't draw it correctly, if you draw it somewhere lower or higher, then this candle will mean nothing to you. This candle will mean nothing to you. But now this candle means something. It's a liquidity grab from this resistant level. So it pushed up, closed above, came down, grabbed liquidity, pushed higher, right? So if you're a scalper, that's a perfect trade to take. Okay, 10 pip, 8 pip stop loss, and then as soon as the candle closes, take it, and then put your stops at break even and see if it runs. That's not my style of trading, but there are scalpers who do that. Okay, so 5-minute candle has closed. We've got another 2.5 minutes for this candle to close. So we've broken the highs, right? We've broken these highs, as I mentioned at the beginning of the stream. These highs are broken. That's the London high. Now we are heading towards this high here, right? This high. Let's get rid of that. We don't need that. Also got 30 minutes, about a little over 30 minutes for the 4-hour candle to close. So the 4-hour is, so far it's got about 30 minutes to close, but it is pushing up, right? It's pushing up. It's grabbed liquidity and it is pushing up. Maybe to go higher, maybe come up here or here. I'm gonna take a look at this area as well now that price is coming up. That's 30-minute. That's the start of this. The open of the candle is the start of the push down, 275 pips, right? If you go down to the 15-minute, that's a volume candle, push price down. But that candle comes beyond the zone. So we've already tapped into that level. We've already tapped here. So we're going to look down at the 5-minute time frame. Yeah, take that, those two 5-minute candles. Price tried to come up twice, couldn't, fell down. So that low 864, high 426. 426, 864. Since we're here, that's a zone right there. Rally base drop. Close 8207. 8207. Go to the 15-minute. What does it look like? Yeah, that's fine. 30-minute. Yeah, that's fine. 15. Perfect. Perfect. Yeah, perfect. It's about a 50 pip zone. So in that red box, if price ever gets here, which is a long way from now, that's the kind of area that I'm interested in. Okay. Yeah, because that's a rally base drop, cause of the move down. Perfect. 15-minute. Yeah. Okay. So we closed above. Perfect. We closed above. The 15-minute closed a strong bullish candle above this resistance. Now we are coming to this supply zone, right? So we are going to now, I'm going to start paying attention when price gets here. We're about 20 pips away from the high liquidity zone and about 40-45 pips away from this light red box. Yeah. Also got 30 minutes for the 4-hour candle to close. So gonna wait, watch this 15-minute candle. Got 13 minutes for this 15-minute candle to close. Let's see what it does here. Also, I'm going to draw this zone again here. Tapped here, yeah, tapped here, tapped here, tapped here. Yeah. that's better. Yeah, that's better. Yeah, tapped here, 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 1693. Yeah, yeah. So see the importance of drawing them correctly. See the 1 minute. You come down to the 1 minute time frame. You can see the liquidity grab from um, this resistance level that turns support now. So it's all about resistance turning support, support turning resistance. So we'll grab liquidity and then straight up 40 pips, 45 pips, right? Now the same thing here. Price has to now, it's coming to this resistance area, which is also a H4 supply zone. So that's why I take sometimes a little longer drawing support resistant levels, because I want to draw them as accurately as I can. Obviously, I can't get them perfect, but I draw them as accurately as I can. Um, yeah, we've got about 20 minutes for this 4-hour candle to close. So maybe I'm going to wait for the 4-hour candle to close. I'm not going to do anything. We'll probably wait for about 20 minutes for this 4-hour candle to close and let the next one open, because I don't want to get trapped in a trade. Anyway, this is about 70 pips away. So let's see in the next 20 minutes how far price moves. Yeah, that's better. That's better. That's much better than before. A lot more touches. Perfect. 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 Touch, touch, touch. Yeah. Okay. Price is reacting to this daily SR level 2657 that we had marked. That's where it's reacting to. It's also probably coming down to grab liquidity to continue higher. Um, that's fine. We're not gonna do anything. No, I'm not gonna do anything. Um, there is a supply zone there, a drop base drop that took out this demand zone right here, right? So that is on the H1, it's a high liquidity zone, and price is reacting to that. But I'm waiting for price to come into the H4 zone, inside the H4 zone. I'm waiting for this high to get taken out. This high that you see here, this H4 high, that high needs to get taken out. There is no wick there. That's this candle has no wick, no top wick. So I want to see price take out that high and come deeper and then push down, if it is to push down. I'm not too worried about these moves that happen within this range. As I said, I trade at the extremes. I look for opportunities at least at the extremes. I don't get too worried about price not coming, like how this fell short of about 5-6 pips and then pushed up 160. I'm not too worried about these zones because price will, if I continue to draw the zones the way I draw them every day, then eventually price will come to those zones and I will get trades from those zones. As I've said before, there are trading opportunities everywhere on the chart. That doesn't mean I have to take all those opportunities. I have to take the opportunities that fit in my trade plan. And when I take them, I got to take them um, with confidence, right? And if the trade goes against me, then I got to manage risk as well. Just like I have done in the past, I've got to manage risk again, right? And that too, when I manage risk, I must also manage risk with confidence, right? Um, so that's, yeah. So now we're going to wait. We're going to wait to see if price closes back below this support. If we close now, the support turned resistance. So if it's first the resistance turns support, sorry, yeah, the resistance turns support. So we're going to see if price closes below this support, then we're coming back down again. As I said, we're ranging today, right? We've been ranging for 10 hours. We've been ranging here in the 100 pip range, and now we broke above the 100 pip range. We close back below. We're coming back to that 100 pip range, and let's draw the one below as well. It's not much information to draw SR here, just two touches. So we're going to have to look left for that. We're going to base our information on what's happening on the left rather than what's happened here. So I'm going to just maybe get rid of that there. Start drawing it here. Yeah, okay, so before that happens, let's just look at this. Let's see where this candle closes. Okay, so this candle closed right at that support level, right? So we could continue down because we closed at support, not above it, not below it. We closed at it, so price could continue down. It's 50-50. Let's see. Anyway, don't need to be worried about that. Price has not come to our area as yet. Let's look at this. That's better. Touched here, perfect. Yeah, that's not important. There. Yeah. So, okay, it's better. Tapped into this support, closed here, continuing to this one. Yeah, that's better. Cleaner. So we have a nice step here, nice rejection here. Came down, came back up, closed here, closed above, came back, went up, came down here. Hmm. Yeah, it's okay on the 30-minute as well. The 5-minute, I would have liked it to be a high. But okay, so we've got a, let's leave that for now. It's very far away from price. Don't need to worry too much about it. The 5-minute is closed above. If you look at the 1-minute, we came down here, grab liquidity. 1-minute candle starts closing above. So we're pushing up to this resistance right here. And we're coming close to our level now. We're getting closer. So we've had to wait a very long time. Right? Waited 2 hours now. More than 2 hours. Um, okay, so the next highest price needs to take out is this. And it should fairly quickly take out these highs. Then take out this high here. This high. So this high is 2663. So it should come above 2663, which is about 25 pips from now. And then That's when we need to start getting interested in what 37. Okay, if we've touched resistance, um, this price is reacting to resistance. Yeah. Should come above this high here, 2664. Might get a bit of a pullback here, but price should eventually come above 2664. 2663, 2664. And the 4-hour candle is now going to close in 7 minutes with a very bullish candle. So you got to be careful trying to take a sell here. I'm going to be very careful trying to take a sell here. Price must just continue to push up. Might get a very small reaction here. A very, very small reaction. And price must continue to push up. But nevertheless, I'm going to watch this area. Going to watch this area. This area right here. Watch this. Okay. 6 minutes more for the 4-hour candle to close. Also for this 15-minute candle to close. The next one, once this candle closes, the next candle should break the high. The next candle should break the high. So I'm going to wait for this candle to close, and the next candle should break the high and continue high. And then we're going to see if it comes to our areas of interest, the light red area, to see if we can get a trade. How long have we been here? 2 hours, almost 2.5 hours. I think I'm going to call it a day in about 15 minutes. There's nothing happening. Price is just very, very slow today. It's done nothing, just reacted to this support, went up, reacted to the resistance, closed above, came back, reacted again, gone to this resistance. That's all it's done. Yeah, it's just traded. It's just been between these two zones. That's just not come to any of those zones yet. Just kind of zigzagged inside of it. Yeah, so 2 minutes more for this 4-hour candle to close. 15-minute candle should close like this. The next one should break the high. The next one should break the high and head deeper. Yeah, next one should break the high and head deeper. But I don't know if there'll be enough volume to break in the first 5 minutes. It might just take longer for this current M15 candle high to break, for the next one to break this M15 candle high. It's just being very slow today. Yeah, it's a very slow day. All right, 4-hour candles closing right here. That's almost a 4-hour close. We have tapped into this zone, into the supply zone. We've tapped into the supply zone. The supply zone starts right at this resistance level, but I'm expecting price to take out this high and come a little deeper, right? But it has tapped into this high liquidity zone already. But I'm not going to take any trades because I'm not taking trades with such big risk. I need to see price come deeper and maybe grab liquidity. Either it comes to these levels that I've drawn so that I can put my stop above here, and I know the stop is at a logical level, and which is that candle there, the high of that candle. Or price needs to come and show me a liquidity grab, right? A liquidity grab. So this high here is 62.94. 94. Let's change the color on that. $62.94. $62.94 is that high. Price needs to come above that. That's that high right there. Yeah, that's basically the daily high. So price needs to create a top wick on the daily, right? Price needs to create a top wick on the daily, come up somewhere here, and then maybe push down, right? So we kind of creating a bottom wick right now to push up. So it needs to break this high. This is 2662.94 or 2663. It needs to break that high. Once it breaks the high, we're going to pay close attention to price because it can very quickly come to these levels and we can have a bit of a reaction. Yeah. So 896. Okay. Okay. Okay, so we've broken the H4 high, we've broken the previous 4-hour candle high. We're coming to this high, 2663, coming to this high. So we kind of mentioned this move right at the beginning of the session, that if the London high gets respected and 15-minute candle closes above the London high, then price is coming all the way up to this red zone, and that's exactly what it's done. That doesn't mean I'm going to take a trade from this down here, because this is not a high liquidity zone. Right, here we go. We broke the high. Now let price come up higher. We broke the H4 high, the daily high. That's the daily. So now if you look at the daily candle. The daily candle is kind of is trying to flip, trying to flip bullish, but it's made a new high. Right? That was the high. That was the open of the day. That was the high. It's on the New York session has come and tested that high, and we've tapped into that light trade area. So now I would like price to come up here, but it might not. It might just drop. It's already dropped 20 pips. It's going to wait for this 15-minute candle to close. Wait for this 15-minute candle to close. Either wait for the 15-minute candle to close, or I'm going to wait for price to come here. If price comes here, then I'll take a trade. But if it doesn't, I'm going to wait for the 15-minute candle to close and then draw my fib on this candle, because we've tapped into this light red area, right? It tapped it, see? Perfectly to the pip, it tapped it. And as soon as it tapped it, we got a reaction. So we're going to wait for either price to close, the 50-minute candle to close, or for price to come higher right now in the next 8 minutes. Yeah, drop 25 pips. Now we are reacting off this resistance level. So we tested it, closed below, came down, closed above. This is the 1 minute time frame. And now it's trying to decide what to do, whether to close above or close below. We have to wait. Okay, I'll be back in about 5 minutes. We've got about 7 minutes for the candle to close. Okay, so 3 minutes for the candle to close. We have had a push down from there. So that's perfect. We've touched that. $340, 783. pips, 32. Okay. Right. Got a 5-minute close below that resistance level and also touched the light red area, came to the dark red area, touched the light red area, comes. So, but price could later on come much higher. That's very possible. Um, I'm going to see in the next. I'm going to be here for another maybe 10 minutes. See if there's an opportunity here. If the candle closes, we can take a trade here with the stop loss above that, above 340. So yeah, roughly about there, stop loss. Let's see how the candle closes. Yeah, it did grab liquidity from there. So touch that candle perfectly. This is the M30 candle. Touched it and pushed down. Yeah, perfect. A minute and a half for the candle to close. Dropped about 40 pips. Close 61. Okay, a minute for the candle to close. That's where I would like to get in. There and there. Okay, let's see if you're going to close a bearish candle here. Be nice to see a bear candle close here. 15 bear candle. But maybe not. Maybe it closes a doji. But I'm kind of, if it does close here, I'm expecting price to come back up here. Get a trade here or here. Okay, so gonna place an order there. Took about 6. Place an order there. Yeah. Okay, so it's a 15-minute candle close. The 5 minutes pushing down. I want to pull back up here. Maybe it doesn't pull back up. I don't know. Let's see. Yeah, it's just falling. It's not pulling back up. The candle open and straight down. Yeah, straight down. Didn't pull back up. Yeah, straight down. No opportunity. Didn't pull back up for entry. Yeah, that's unfortunate. If it came here, take an entry, that's a 30 pip drop in one candle. That's a liquidity zone, so you can anticipate high volume in that area, a lot of volume in that area, but nothing. Did not come back up. Yeah, just unfortunate. This candle has no top wick either. Maybe the either this 15 minute or the 15 minute after this might come up to create a top wick before it heads down. Maybe just go straight up after that. But nevertheless, that's the stop loss just above this high here. That's the one entry and that's the second entry, right? And I'm going to leave it there. I'm going to end the stream now because I've been here for 2 hours and 45 minutes already. So I'm going to end the stream now maybe. But that's going to be, I'm going to place that, I'm going to keep those pending orders there. 2661, 2662, right? 10 pips apart. And stop loss is about 266350, roughly there, right? So yeah, 15 pips on that stop loss, about 23 pips on this stop loss. And then later on, I might, let's see if price does come back, I might place pending orders here with the stop loss above that there to see if price, I can get a reaction there, a bounce there as well, okay? So yeah, yeah, price is coming down. It's coming down. We just tapped it and we just dropped 70 pips. No chance for an entry. Absolutely no chance. Just touched this light red area to the pip, right? And dropped 70 pips, 68 pips. Tried to wait for a pullback here, didn't come. This is the candle open. This is the 15-minute candle open. No top wick, drop straight down. Another 35, 36 pips. So no chance for price to come up. That's fine. This happens. Come back tomorrow, do the exact same analysis. Draw the zones, identify the high liquidity zones, and then wait for an opportunity, right? Okay. Yeah. The 5-minute candle starts to close below this, then we're continuing down to this support. We're not coming back up. Okay, yeah, because I don't want to be here. I don't want to have the stream open and wait for another 30 minutes. Let's see if this candle. I'll wait for this candle. I'll wait for maybe the 5-minute candle is pulling back. Okay, I'll wait for this 15-minute candle to close, which is 10 minutes from now. I'll wait for this candle to close, and then I'm going to end the stream. When this 15-minute candle closes, I'm going to end the stream because I don't want to be here beyond that. Let's see if we come up, create a top wick, then we can take a trade. If not, we just don't have a trade today. Let's see, it's coming higher. That's the 15-minute. Still hasn't created a wick, top wick for the 15-minute. Came pretty close, pushing down though. Yeah, came close, pushing down. So this is the area where you want to kind of close some positions. If price gets in and comes down, if it comes down, if you get in, if it comes down, this is the first area of support. Then is this, then it's further down. Okay, this is where price struggled quite a bit for about 10 hours prior to New York session, prior to the NYSE. Struggled here for about 10 hours. All throughout Asian and London and pre-NY and NY Open, we struggled here. So that's the first area that you want to take a lot of your position off. Okay, 7 minutes for this candle to close. Still no sign of pushing up. We are rejecting that area. We're not pushing up. Yeah, we're just coming down. We rejected. We're coming down. Another 100 pips if price is to come up here. Another 80 to 100 pips. 80, 100. That's where I would have liked to see price come to, but it didn't. Just touched this light red area to the pip and just dropped 70 pips. And we're still dropping. Could drop even further. Come to this support. Yeah, we're coming to this support. It's maybe we're not coming up today. Once we come here, then that's it. I'm going to close these trades and then call it a day. Because it might take another 30-45 minutes for price to come back up, and I'm not going to be here. Yeah, so we came almost to the high, but we couldn't create a top wick. We rejected and we're pushing down. We've broken the low. We're coming down to this support now. Okay. All right. That's the 15-minute candle is going to come down probably here and touch this. Okay. Hmm. $72, 80 pip drop. Yeah, it's coming down. Pushing down, pushing down. There we go. Right. Okay. So we've touched support. Okay. Price. That was the move that we were anticipating. 83 pips. Then if we close below, we're continuing down. But that was the move that we were anticipating all NY session. Unfortunate, price didn't give us entry. Didn't come back. Just there was no top wick here. I was anticipating for the next candle to open, create a top wick, and then push down. It just didn't. Right. So that's it. That's the end of the stream. Stuff like this happens very often, more often than not, in fact, and that's absolutely okay. I did everything that was right. Drew the zone, anticipating this zone to be a high liquidity zone. So inside the high liquidity zone, even more or better liquidity inside this light red, and that's exactly what price did. Touched it and dropped almost 90 pips, and we're still dropping. Okay, so we could, if you close here, if a 5-minute candle closes below this, then we're going to come further down to this green area to 2650, and then we close below 2650, we're coming down to 2644. Right, we're coming down to 2644. Okay, so I'll be back here tomorrow, same analysis, exact same thing. This is the purpose. This is the purpose. This is what we are, this is what I'm here to talk about. The right action. learn to draw supply demand zones correctly, identify high liquidity zones, HLZ, okay, to trade from. And that's exactly what we did today. We identified high liquidity zone here, and in that the light red box, and that's exactly where price tapped and dropped 88 pips. Okay, so that's what we are doing, right? So stop loss would have been above there, around, if he did come up here, then stop loss would have been about 14-15 pips to get about 70 pips, right? But it didn't, and that's okay. That happens. It didn't come up. um, so that's what we're doing, and then learning how to draw support resistance levels correctly, right? And that is what this is about. So that is what I was doing here. I was drawing support resistance levels, and you saw exactly how I drew it, and you can see how price is now reacting to it, right? I drew one here, you can see how price reacted to it, here, here, all here, and I drew one here, and you can see how price reacted to it, right? So that's what we're doing. And then if I did get in a trade, and if I was going to have a losing trade, you would have seen how I manage risk, so that I can have a loss less than I planned for, a loss, so that I can lose less than what I had planned to lose, right? Or if I had a win, then I have a low risk, high reward, high probability trade, because if I did get an entry here, I would have had positive RR on risk trade, not negative RR. That's the whole purpose, to have positive RR and not negative RR. I'm not trying to chase high RR, 5 RR, 6 RR, 7 RR, 10 RR. That's not the purpose. That's not what I'm doing. I'm not trying to chase high RR. If it happens, it happens. But what I want to do is take positive RR. That's the purpose. Take positive RR. Okay? That's all I'm trying to do. Take positive RR trades. All right. So see you guys tomorrow, um, for tomorrow's NY session. All right. Take care. Have a great rest of the day.